Hello everyone, welcome back to Residencia. Here I'm Andrea Papito, I'm a founder of Residencia, the firm that allows you to build day by day a defense file against the international tax audits when aggressive tax authorities from aggressive jurisdictions wants to have a slice of your income on your company set up abroad. So in the classical cases, we help entrepreneur and administrator when they have an international structure. The administrator and these companies is in one jurisdiction, most likely a tax haven or fiscal privileged territory, and the holding or the control of this company, it's from a high aggressive tax country. So here in Residencia, we help people to understand how to build the structure in order to be always ready in case of tax audit. So whenever a tax audit comes, you have already all the file, all the elements, the proofs on spot, and we can basically tell you exactly how to build those proofs on spot and not just rush the day before the audits, okay? Now, one of the most important things that you have to consider if you want to build an international structure, especially if you have some branches of the structure, some foreign and parent subsidiary structure in Europe, for example, you have to consider a lot of anti-abuses rules that you might find in your path, and you're not aware of the existence of it. And here in Residencia, we exactly build all the defense files in order to be compliant with every and each anti-abuse rules. And the European Union, all 27 countries, is one of the most restricted and very over-regulated area in the world, in which we have all the, and now I'm going to list them here in the board, all these anti-abuse structures. It's a very important here to understand that you're free, of course, to build your company there, to run your business in whatever jurisdiction you want, but you also have to make sure to be compliant with all these list of rules. Let me explain exactly what I'm talking about. First of all, I'm talking about the controlling foreign company rules, the place of effective management principle, POAM, substance over form. Okay, so these are the most common one. So let's start with this one. Controlling foreign company. It's a principle where the company is controlled by an individual in one of these jurisdictions that belongs to this type of anti-abuse rules. So basically they are telling you, if you are controlling this company in a tax haven privileged country and there you don't have the means to prove that it's a real business, it's a real substance, if the income from there is just passive income or well, there are several criteria for CFC rules. We can talk about it in a different video. But mostly the reason behind is that if you have established your company and you are controlled from an aggressive tax authority, the CFC rules makes your company transparent. So the tax authority can tax through it like a pass-through company, like an LLC, okay, at the ordinary standard rates, okay? And the controlling company happens when you, for example, certain jurisdiction considers you controlling a company when you have more than 50%, obviously. But there are also other jurisdictions that have implemented the CFC rules in a different way, like only if you generate passive income and you control it, then we're gonna tax you through unless you prove the contrary, unless you prove a real substance, okay? Then we have the place of effective management. It's where there are directives. So when you have a company abroad and the company has a director there, the administrator that lives, it's a real person that gives real impulse and direction to your company, so the company in that jurisdiction, even if it's held by another one, has its own independence, it's fully compliant with the place of effective management principle. And almost all the jurisdictions in the world, not just in European Union, apply this concept. And in the country like UK, Ireland, I think also Canada, they apply the substance, Australia, they apply the substance over form principle, which is quite similar there are some small nuances and details between those three criteria, but also the substance over forms is basically the self-descriptions if you have actual real economical reason to be there, and also a real business there. Reason and a business there. The reason is because you might also have opened a company there just because you want to exploit the double taxation treaty and you want to spare taxes. So the reason is just because you want to spare taxes. If this is the only reason you open a company there, it's not gonna work. Okay? And there is a real substance. And this is the word itself, it's self-description. If there is an employee there, office there, that actually has the daily activity, talking to client, stipulating contract, etc., etc., etc. So there is a reason and a real substance in that specific country. Okay, so the way of building the defense file is to basically day by day archive all this documentation. You don't have to archive everything, but only those needed in case of tax audit to pass. Substances over form, if your country of origin and residence is, for example, UK, POEM and CFC if your country of residence or origin is one of the European Union countries. Okay. At the top of these three, there is another one, which is actually the local national anti-abuse laws. Okay, national, local anti-abuse laws. And here it's a very important point, because before even trigger these three, which are on an international level, so those are invoked when there is a dispute between jurisdictions, so you have to invoke this, dismantle these accusations. But even before moving here, the local national law of your country of origin of residence, they might have their own custom anti-abuse rules. There is one of the countries in Europe, for example, Belgium, has a national law, a local national law, which is called the Cayman tax. So imagine, it's then designed by who decided to establish a company in Cayman Island and have the residents on the control of this company from Belgium. And they have basically written one of the most sophisticated anti-abuse law that the world have ever seen. And before even move to this point, the first things that the local tax authority do is to trigger their own national anti-abuse rules. So here in Residencia, we not just check the general ones, but based on your country of residence and based on your country in which you have your holding companies, we check the local anti-abuse rules and the index of aggressiveness of your tax authorities in order to understand how to better defend, not just on international level, but also on national level, which is the first things that is going to happen, because you first need to trigger, the tax authority will trigger this, you have to go to court in your country of origin, and then you can invoke the rest, or basically invoke the Convention to avoid the double taxation to resolve disputes. I hope you like this kind of video. We're going to go more in details through this concept if you stay tuned in Residencia, and notification bell like button to be always updated whenever we release this kind of content. See you to the next video. Bye.